Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, Ken Shreve here with a breakdown of the action in today's session, where we saw more red on Wall Street as investors reacted to the latest Fed minutes. Ken.
Yeah, not too bad a close for the market, but we do have three stocks to look at as usual. Take a look at two earnings reports from the likes of Palo Alto Networks (PANW), and in the home building group, Toll Brothers (TOL), and finally, software name we don't talk about much. Ticker is AYX, and the company name is Alteryx, holding near highs here and looking pretty good.
All right. Well, first, we'll take a look at the major indexes today. It did end up being a mildly mixed session, but stocks not reacting favorably to those Fed minutes. But at the end of the day, we had the Nasdaq up 0.1%. Also on the upside, the Russell 2000 up 0.2%. On the downside, the S&P 500 down 0.2%, and the Dow off 0.3% here. So we saw solid losses in yesterday's session. Ken, today not getting a bounce, but not a waterfall action, lower today.
Yeah, you can see the Nasdaq still holding above that 200-day moving average, a very key support level to watch here. Nasdaq showing right now a close near lows, but again, there did seem to be some buying late. But you did mention a distribution day yesterday, higher volume decline for the Nasdaq. I think we've seen 3 higher volume declines over the past 9 trading sessions. So market looks a little vulnerable here, but indexes continue to hold above these key support levels. We had the Fed minutes came out at 2 p.m. Eastern time. Really not a whole lot new there. Consumer inflation still at 6.4%. That's way higher than where the Fed needs it to be. So market thinking there's going to be 3 more quarter point hikes, March, May, and June. Could see a 50-point basis point hike, not out of the woods yet, but Fed's fighting inflation, and the market is just trying to figure out how high rates are going to stay and for how long.
All right, well, we'll have to see if that 200-day line can act as a key floor of support for the Nasdaq here. Let's also take a look at the S&P 500, which did extend its losing streak today. Now it is right at that 50-day line of support that it's trying to hold, below that round number at 4,000, closing today at 3,991 and change. And that's just above the 50-day line here, below those highs from late last year. And now we have the S&P just over 1% above its own 200-day line. So definitely testing support here. Not a bounce here would be great, but we don't know if that's what we're going to get. So it feels like we're at a critical juncture.
At a critical juncture, and again, it's been a really strong move off the lows for both of the major stock indexes. So you've seen a fairly orderly pullback so far for the S&P 500, but just like the Nasdaq, it's kind of plumbing these key support levels. So we'll see if buyers come in and offer support. We have seen some growth stocks come under increasing selling pressure, seeing some big percentage declines. So that's important to pay attention to, but indexes are holding support so far, so we'll give the market the benefit of the doubt here.
Okay, and a quick look at the Dow and the Russell. Here's the Dow extending its losses after clearly undercutting its 50-day line in Tuesday's session. After that had been a support level for the index, it is now right around its lows from late January, around the 20th of the month. And then we have IWM, which tracks the Russell 2000 ETF after slicing below its 21-day line in Tuesday's session, reversing slightly higher here today. So perhaps finding a little bit of support right around its highs from late last year, at least for the time being. Still a little bit of room between the Russell and its 50-day line. It's about 2.2% above the 50-day and 4% above the 200-day.
Yeah, I think the Russell 2000 probably looks the best here. I mean, it's just kind of coming down and retesting this last breakout area. So it's holding here. Still a little air pocket between where to the 50-day moving average. So the Russell 2000 just kind of retesting a prior breakout area, and still looking okay here.
All right, and now let's take a look at the 10-year Treasury yield, because we have seen that inverse correlation rear its head this year, with the highest level in 2023 coming on Tuesday, but yields backing off a little bit today. The 10-year yield down 0.8%. So hopefully helping stocks a little bit. At least that's what we saw today. Maybe not really fueling gains, but maybe alleviating a little bit of the downward pressure, at least as opposed to if we were to see it continue to climb higher.
Well, yeah, I mean the 4% level is really critical for the 10-year yield. So I wouldn't be surprised even if it does bump up against 3.9944%. It could it could drift a little bit lower and consolidate. I mean, it's been a very big, sharp move higher for that 10-year yield. And while we're looking at the chart of the yield, we can also look at UUP, because this is kind of coming up quickly to its 200-day moving average. So it'll be interesting to see if the yields bump up against 4% and this UUP bumps up against its 200-day moving average. Will both get kind of resistance and start to head lower? That could be good for the stock market, but we'll have to wait and see how that scenario plays out.
Yes, and among sectors today, keeping an eye on SMH, the chip ETF, which we have earnings from Nvidia coming out. So it looks like maybe we could see some action in chip stocks depending on the reaction to Nvidia's report out tonight.
Yeah, Nasdaq, not surprisingly, come under a lot of pressure with the SMH down now for, it looks like, 5 days in a row. But yeah, all eyes are going to be on Nvidia after the close. See the stock trading slightly higher. Don't know that earnings have been released, but it'll be an important earnings report for the chip sector for sure.
Mm-hmm. So yeah, we can check in on Nvidia as we wrap up for the show. Ken, you may have to remind me, but we'll try to go there before we wrap. And now let's take a look at some individual movers in today's session. Palo Alto, an earnings winner today, finishing up 12.5%, very close to the session highs today. A gap up that is helping the stock clear a declining tops trend line from its highs starting in spring of 2022, connecting to summer of 2022, and also December as well. So breaking this long slump that it's had. It looks like in 2023, the stock has really been off to the races with relative strength in spades here.
Yeah, and we put this one on the leaderboard watch list because of just the strength of the earnings report and the fact that the stock is up, many up weeks in a row here. Only one down week out of the past 7 or 8. So PANW is looking very good here. It was a nice big earnings beat. The revenue guidance for the full year, they think they can grow revenue by 26%. They also raised their earnings guidance for the full year significantly. Now they see earnings of around 397 to 403. That was well above prior guidance of 337 to 344. So pretty good earnings guidance, and starting to see some decent earnings reports in this security software group. We heard from Fortinet not that long ago, also performing well. Next week we're going to hear from more earnings reports in the security software group. So with Palo Alto, I'd be careful about chasing the stock up here. Certainly, would not be buying the gap up today. But here's an example of a stock because of such a strong move off lows. Let's wait and see if it can just move sideways for a few weeks and maybe get one last little shakeout, and could pave the way for a new entry here.
Exactly. I think that would be very healthy. And also, we're seeing the stock pausing right at its prior highs from last August, September area. So resistance there as well. So a pause here and seeing the stock tighten up and hold this gap up low would be quite ideal.
That's right. That's why we put it on the watch list.
Exactly. Let's take a look at TOL, Toll Brothers, moving up in reaction to its earnings report out today, though it closed off highs, maybe a little bit of resistance at its shorter term moving averages, but still with a gain of 3% today, some strong volume. It did see decelerating earnings growth and a slight decline in revenue, Ken, but this stock is still holding up really well.
Yeah, the earnings growth was pretty good. Revenue down 1%. Both the bottom line and the top line were above expectations. And I mentioned Toll Brothers on the news this morning for IBD Live, and that CEO Douglas Yearly saying he's talking about improving buyer confidence and seeing a pretty good demand picture, even with the spike in the 30-year mortgage, and so the numbers were pretty good at Toll Brothers. On the weekly chart, still think home builders have a chance of leading this year. When I just look at a weekly chart for Toll Brothers, we can just see kind of a big cup with handle base here, and this handle that is forming is really just a picture perfect handle. It's kind of an orderly decline. Last sellers getting shaken out here. If this market can hold itself together, home builders could still be a nice pocket of leadership.
Yes, one to watch here for sure. And now let's take a look at ticker AYX. This is Alteryx, a database software stock working on a bottoming base, coming up right to resistance, Ken, and potentially forming a little handle here. It looks like after a strong start to the year and a positive reaction all in all to the quarterly report that came out earlier in February. So it seems like it's shaping up just under the 70 level.
Yeah, so the company, offers this sort of a self-service data analytics software platform for customers that just want to, analyze their company data. The numbers are huge. You've got big annual earnings estimates. You can see revenue growth over the past 2 quarters, 70% plus. So, like the setup here as well. Anytime you see a stock rising for several up weeks in a row, I think with AYX, I'm not sure how many up weeks that is in a row, probably seven or eight, and now you see the stock barely budging this week. So this is a sign of strength and support. It is a sort of technical setup that you want to pay attention to, and when you have the strong fundamentals to boot, I think this one, software stocks are still challenged because of this rising interest rate environment,
Right.
and that's something to pay attention to. But there are some software stocks delivering nice growth, and Alteryx is one, and it's in a good technical setup as well.
So where would the entry be? Of course, we want the market to cooperate, but would we need it to clear 70? Would an aggressive entry be available to those really looking to sneak in here, or does it just need more time to digest the strong gains as of late?
Yeah, I really would just like to see this. You can see a couple times the stock has bumped up against the 69 level, 69.50, and now it just recently tried to get over 70. So that 70 still looks like a resistance level to watch. It'll take some heavy volume buying demand to push it through there. And again, it's going to need a healthy market to do that. So I would really wait for the stock to just kind of move over this resistance right around 70, and I think that ironically could be your lowest risk entry.
All right. Well, now let's check in on Nvidia before we wrap, as promised, with earnings due out after the close. Perhaps they haven't issued their numbers just yet, but it looks like as of now, after hours, the stock is up about 0.7%. I know the call is coming up at 5 p.m. Eastern. So yeah, I think as of now we are waiting for those
Still
numbers to come
waiting.
out still.
Yeah, could be 1:30 Pacific time, 4:30 Eastern. But if the conference call is at 2 p.m. Pacific, we should see it soon.
Well, we are going to have the latest for you on investors.com, the breakdown to the results from our tech team. So make sure you keep tabs on investors.com for that, as well as our other earnings coverage. And of course, we'll cover this tomorrow morning on IBD Live, investors.com/IBD Live for all the details on our daily morning live stream, breaking down the stock reaction to Nvidia earnings, the potential impact on the sector and the broad market, Ken. So we'll have to see. More fun to come as this week continues to unfold.
Yes, indeed. And we'll have all of the coverage tomorrow morning on IBD Live for sure.
That's right. All right. Well, we'll see you there, everyone, in the morning, and we'll also see you right back here at the close. See you then.